Good morning, pro traders, and welcome to yet another Monday morning market review. I hope you guys all had a fabulous weekend and raring to go for another week's trading. And today, obviously, we are talking through the action that took place last week, as well as having a look at our charts for the week ahead. Now, last week, I think the general theme was that everything was going along reasonably quietly and okay when we had some chop late in the week. That took us out of a couple of our trades. Overall, I think the week was okay. Nothing spectacular, nothing to write home about. There's not that much on the table at the moment either. We will have a look at those that are. And certainly the more heavily traded instruments, such as the majors and the minors, are already pretty dead at the moment. It's some of the more exotic pairs, not that they are actually exotic, but the less liquid pairs are showing some more directional bias. And those are really what we're interested in more than anything else this week. But let's have a look through the pairs, starting as always with the Euro USD. And of course, if you do have any questions, please remember you can use the chat box. And if you're watching this as a recording, use the comments below and we will get back to you on an answer. Right, so on the weekly time frame, still very little has changed. Last week we had a bit of a high test candle. This morning I see we actually hit our adjusted take profit for an overlay, but just for a small take profit, certainly nothing really to write home about. But on the daily time frame, last week we did get that bullish breakout on the 18th, last week Tuesday. So that obviously gave us something to look at. But there you can see what happened through the rest of the week, where it was very choppy. Not only that, but we are very much into a corrective wave here. It's basically a flat phase two, so nothing really doing for us right now. But bearing in mind that this could well come to an end because this support level is still being respected. And certainly so far this morning it is as well. Let's keep an eye on it. You never know. This may well turn into another bullish impulse wave, in which case we'd be able to trade that on our lower time frame strategies, but certainly there's nothing for us on the daily time frame. Right, so I always like to give a bit of context with the Euro USD. On the cable weekly, we saw that resistance level tested last week, and it looks pretty much like this on daily, a similar picture to what we saw on the Euro, except more significant weakness with the phase two certainly coming and encroaching on the previous phase two's price territory, and yeah, exhibiting more weakness than we were seeing on the Euro. But once again, you know, if you're just a channel trader and you're not looking for a valid W pattern here, you may well have something that is valid and tradable. I have to say, though, that today we already seen a lower low formed. So unless this candle today, daily candle, goes and makes a higher high, it will mean that this bullish wave is over. And if that's the case, of course, then we will have seen a breakdown in sequentiality of cyclicity, and that will be the end of this trend. So just keep an eye on that. It could go either way. Dollar yen up next. Very flat last week. Inside bearish candle, not really showing us anything of interest at all, which looks like that on the daily time frame. So we can safely ignore that one. On the dollar Swiss, obviously this is really just an inverse to a certain extent of Euro USD, and nothing for a daily impulse. But we did also see the continuation of our bearish trend. Again, however, you know, similar to cable, we're not seeing the same strength as we've seen on the Euro itself. So at the moment, not particularly interested in this. We do still have a trend. We did get a close outside of that channel last week. But again, there is a potential for us to have two phase twos here, which would therefore mean that we have seen the end of this bearish trend. Alternatively, if this continues down without isolating a low here, then fair enough, we can look to keep trading this, especially if you are not looking for a valid M pattern in this case, because we have seen that weakness with the encroaching phase 2. Right, dollar CAD still in that bearish wave on daily, which means that this is still tradable on a daily impulse. In fact, you should still be in a daily impulse that we spoke about last week. We've just been managing the stop on this, so I think we've reduced the risk by about half. If you're using standard targeting, we're still some way off because obviously last week the general directional bias on this was not particularly impressive. Did we have any H4s? No, not really. So just been trading this really on that daily impulse and waiting to see what happens. Managing the downside and letting the upside look after itself. The Aussie and the Kiwi both showing nothing really for us to get interested in. Inside bar here, we really can't do anything with that with the daily time frame, and here on the daily as well, very much inside of our channel. So just not interested in doing anything with this at all. And a similar picture on the Kiwi, where yeah, nothing doing really. Okay, so let's have a look at the yen crosses, starting with euro yen. We've still got that nice bullish wave in our bullish trend. It's still a potential trend because we need to have that second impulse wave outside of that range. But having said that, this has been quite an extended impulse wave. Last week's candle, however, certainly not an impulse candle. In fact, it's a high test. So if you look at that on the daily time frame, you see that breakdown in sequentiality of cyclicity. Certainly with that bearish impulse candle on Friday, talking about some of that chop, looks like this bullish wave on the weekly time frame is over, which also is represented by the fact that this bullish trend on daily is over with a phase 2. So nothing doing there for us. If you're trading an overlay, you should be in a bearish one here. But from the point of view of our core strategies, that's now dead in the water. Similar picture here on GBP yen, obviously not as extended as euro, but looking at this on daily, likewise, you know, we did just get a bullish impulse wave, but then you can see we saw that chop last week, Wednesday, and well, certainly that isolated that high. We've got a phase 2, and if this ends up being a phase 2 as well, certainly if today were to close as it is and rings that, then that will be the end of it, and therefore the end of this bullish trend as well. So keep an eye out for that. Doesn't look like we're going to get much action, but we can't second guess the market. Let's wait and see what happens. So our yen pairs have been more interesting for the last while, as you know, and Swiss yen here showing a continued bullish wave inside of this potential trend on weekly time frame. We actually did get an impulse candle at the end of last week, but the market's gapped down over the weekend. Nevertheless, this is still an intact bullish trend here on the daily time frame. It's not showing strength, however, because we did get that inside close. But the trend is still intact, and both Thursday and Friday gave us an outside close. So this, even though it's still a potential impulse wave, we are outside of the channel. So for pure channel traders, this is certainly something that you would be looking to trade down on the H4 time frame as well. And of course, if you are not already in a daily impulse, Friday would have been a setup for you. Well, Friday's close, which means this morning you would be looking to enter this on a daily impulse. But some of you folks are also requiring an outside C close on the W pattern. So if you're just a pure channel trader and you don't mind trading with that weakness showing, then this is certainly a setup for you to go long. CAD yen, similar picture, not quite as strong, but nevertheless, on weekly, same kind of thing. We're still in this bullish impulse wave of a potential trend. Here on the daily time frame, I mean, you can see that over the last, well, 2 weeks now, basically, this has basically been going sideways. We did have that bullish daily impulse here as well, where we trailed the stop and we actually got stopped out on Wednesday. But it's still a valid setup to go long, as long as you don't mind the weakness that's creeping through here. Personally, I'm finding that over the last few months, certainly in the trickier trading conditions that we've had after February, March, those traders who are being more selective and requiring a valid outside close, a close outside of the channel, and certainly in a trending market like this, that would also be an outside close for a WM pattern, are getting far fewer trades, but the equity curve is consistently upward, slowly, but still upward. All right, so just bear these additional selection criteria in mind if they are in your trading plan. Okay, so Aussie Yen still inside of the channel. We spoke about this last week, how it tested that resistance level. Well, that has now been ringed by last week's bearish candle. So definitely a failed test of that resistance level here on the weekly time frame. And you can see there on the daily how we've just got this weak bearish cyclicity coming back. We had a successful overlay, but apart from that, there's nothing really for us to do on this pair at all. Kiwi is a similar picture. Now, this is also ringed. We're back inside of the channel. So we spoke about this being just outside of the channel last week, but nevertheless, it clearly looks like it is continuing to respect that overall resistance level. And here we see that breakdown in bullish cyclicity. We've observed weak bullish cyclicity for a couple of months, basically now, certainly around a month. And that definitely came to an end. That high has been ringed, and you can even see that the trend line has clearly been broken with that bearish move last week, Wednesday, and a bearish impulse candle. And of course, this is now also a bearish impulse wave. So we did have phase two, phase two, phase two. We've now got a bearish phase one. Deep inside of the channel here. The only thing we managed to get here was that bearish overlay, which was quite nice. Right, so that's the end of the yen pairs. Going into the euro crosses. Euro GBP on weekly time frame, still absolutely nothing. That last week's little high test doji being pretty pathetic overall. And it looks like that on daily. So apart from another overlay, which also hit take profit, we've really just got nothing to look at on these at all. Euro Swiss, similar picture. Weak bearish cyclicity still overall on the weekly time frame. Last week, there you have some choppy price action showing itself on that candle with that high test, that very low close. So yeah, we've certainly seen a breakdown in cyclicity over here, that bearish breakout proving itself to be a false breakout. Breakdown in cyclicity, we've actually had that bullish impulse wave last week, but this is all taking place inside of the channel. So once again, nothing really doing for us at all. Eurocad, a little bit more interesting overall. Here on the weekly time frame, we've seen that low ringed last week, but it is a high test candle, one which closed outside of our channel and therefore respecting that resistance level, at least so far. So trending on this time frame, yes, still very much so, even though it's a potential trend with this breakout, but it is respecting that resistance level. On the daily time frame, we're still seeing that bullish cyclicity. Let me just go to the correct chart. On Eurocad, we're seeing this weak cyclicity in a bullish direction. It's still intact. We do have a bearish wave now with that previous high being isolated, but we are deep inside of the channel. There was a breakdown in the sequentiality of cyclicity, so we need to see this resume before we can do anything else. We also had a bearish daily impulse here, which got stopped out last week on the trailing stop for a very small loss. Right, so Mpino is also saying outside C close as an additional selection criterion. Absolutely, it's something that is very conservative, but it does keep you safe in trickier times. It also means, however, though, in more active times, when the markets are really pumping, you'll make less money. But the flip side of that is when the conditions are not as friendly, you will lose less as well. So yeah, definitely something to consider. Remember, the one thing with us convex traders is our priority is not to avoid losers. The priority for, in fact, all professional traders is to make sure you don't miss the winners. Why is that? Is because with our convex strategies, our winners are much bigger than our losers. So in trying to avoid losers, you end up losing a lot more money in terms of the opportunity cost. So it's something that is dependent on the risk appetite, not only of yourself, but if you're trading other people's money, on your clients as well. But remember, this is not just about return, it's also about the volatility of the equity curve, which represents risk, and we're trying to maximize the return versus the risk. And for those of you who took part in the trading challenge, you'll know that that's how we actually measure success. It's not just how much money you've made, but the return divided by the maximum drawdown, which represents the worst negative volatility you'll have. That's another topic we are going to be talking about in more detail in the coming weeks in some of our training. All right, so moving on, Euro Aussie here on the weekly, still very much inside of that channel, but last week we did get that bullish impulse candle. So it looks like this on daily, where we also had a nice breakout. This is definitely one of the instruments that we're most interested in trading. Now, we can't do anything on the daily time frame because we're deep inside of that channel on the weekly. And we also don't have a valid W pattern here either. If you are trading the LPO, however, in fact, even with the LPO, you would still be inside that LPO range. So nothing doing for us on daily impulse, but clearly here on the daily time frame, we've got nice established bullish cyclicity at the moment. Yes, we did see that chop late last week, not helping our cause generally, but overall, this is still an attractive market. So certainly for the H4 impulse, I do believe we got into a trade on this morning. It looked like it wasn't going to work out with this bearish move. I have to admit, I was up early and I was watching it, which I don't normally, and I was pretty convinced that this was going to stop us out, but it didn't. So I'm quite happy about that. And also our trade manager software took that trade, which makes it even more satisfying for me. But in any case, at the moment, we're into an H4 impulse on this instrument. Euro NZD here on weekly, still kind of respecting that resistance. Yes, we did get a bullish impulse candle on weekly, which looks like this on daily. So a similar picture, as you can tell. But yeah, so we obviously would be looking to trade this both from the point of view of being outside of our four-wave channel. And as with the Euro Aussie, you'll notice that we do have an outside C close here. So this meets all of our criteria for dropping down to the lower time frame and looking for an entry here. Unlike the Euro Aussie, there has not yet been that final selection criteria met. So we are still technically in a pullback, and we are waiting to see if we get a bullish impulse candle to be able to go long on that one. Right, so GBP crosses, GBP Swiss looking like an inverted Euro GBP, as you would expect. So that's not interesting at all, and quite frankly, nor is that. So this was a losing overlay that we had last week, so that didn't go in our favor. We lost just over half our risk unit there. But in any event, this is pretty dead in the water. GBP Cad on weekly looking a lot more interesting. So we've had that bearish breakout some time ago, of course, but the last 3 weeks have effectively been retracement candles, including obviously the low that was ringed. What is interesting about this, though, is that it continues to respect the resistance level. So looking to see if this phase 2 comes to an end. If you're trading any kind of a hybrid strategy, you need to see a breakdown in sequentiality of cyclicity here on the execution time frame, as well as get that bearish impulse candle. So otherwise, you need to wait for the end of the week to see if we do get this high isolated. If this high is isolated, then certainly for daily impulse, we'd be looking to trade that the following week. But we're jumping ahead right now. So on the daily time frame, though, nothing doing for us here at all. GBP Aussie testing that resistance level on our four-wave channel, hasn't broken through it yet. Let's wait and see what happens there. But obviously that bullish impulse candle looks like this on daily, where certainly we are way outside of our 4-wave channel still. And despite that chop last week, just gave us that inside bar, followed Friday by a very nice bullish impulse candle. So valid W pattern, of course, both in terms of the point X as well as our 4-wave channel, which is pretty close to X. So this certainly has been very tradable on the H4 time frame. But having said that, we haven't had that much success. So we spoke about this before. We looked at that trade having been stopped out the previous week, but we did get another entry here on the 18th, which we managed almost to break even before it got stopped out on the 20th, followed immediately by another bullish impulse candle. So of course, requiring us to get back in again. And then we saw some choppy behavior towards the end of the week, but we are still in this trade. So just counting candles here. In fact, we need to, and we would have on the trader platform, have trailed our stop to pretty much break even. As you can see, it'll be below the lowest low of these last 6 candles. So this one pretty much at break even. Let's see if we go on to hit our take profit on that one. So as you can see, some of these trades are really taking their time, either not working out at all or languishing on their way, hopefully, to the take profit. Right, GBP NZD, also another bullish impulse candle. Remember we spoke about this last week at length, but it has closed again outside of our channel. So if you are just a channel trader and you're not looking for that valid W pattern with an outside C close, then this is all systems go as well. If you require the outside C close, then not so much. But on daily, here you can see again that it's certainly outside of our 4-wave channel and has spent, certainly it broke out of it again last week on Wednesday. So if you're just trading the channel, then absolutely this is valid for an H4 impulse. If you require that outside C close, unfortunately, that did not satisfy our requirements there. That chop again, you can see how we did get, if you did get into this just using a channel trade, then you would have also been stopped out by that chop on early on Friday morning, I think it was, or during the course of Friday morning. So trailed the stop almost to break even, but didn't quite get there. So what about this week? Well, certainly we're still in this bullish impulse wave of a trend. So as long as that is the case, as long as this bullish impulse wave remains intact, then we will still be looking to get into H4 impulses on this as well. Right, that's the end of the GBP crosses. CAD Swiss, we've had that high ring there. So again, we've seen this resistance level now respected. So we are very much back inside of this channel. We did trade this for quite some time, obviously, but those days are now gone. Obviously, February, March were great trading times. These are definitely more challenging times. And as you know, what separates the successful traders from the unsuccessful traders is generally what you do when times are not good. Right, so that's what it looks like on daily inside of our channel. No intact cyclicity at all, and we even had a losing overlay. So this has not been our friend. So moving on, Aussie Swiss on weekly, nice bearish impulse candle last week. Inside the channel, so we're not interested in trading this on the daily time frame, but the daily time frame for selection is great because we have this intact bearish cyclicity. We also have a valid outside C close, if my memory serves. And well, most of last week, this was obviously pretty bearish. So I don't have any trades showing on here, but probably something, if we did get into one late in the week, once again, that chop early on Friday morning would have taken us out there as well. So yeah, much as this is going in a bearish direction and the conditions have been valid, there has been some of this these deeper pullbacks that have knocked us out of some of our trades. Certainly, I think this would have been another setup maybe here. In any case, I don't think we saw anything work out on this last week. And that is the name of the game when you have these choppy markets. So certainly that was a bit of a theme for the week, as I mentioned in the beginning. All right, Aussie Cad. Weekly, we've spoken about this at length in the past, so certainly way outside of our LPO channel. Very pretty picture, in fact. Now, last week, another bearish impulse candle, and that looks very pretty as well, generally speaking, as an overall picture on the daily time frame. But having said that, if you look at these candles through the course of last week, despite the fact that this wave remained intact, we had a sequence of lower highs, which means that none of, well, certainly not that low, ended up being the end of a bearish wave. And with that outside close, the lower close on Friday, it did confirm this as a bearish phase one wave. But along the way, before we got there, we had this pretty crappy price movement, to be honest with you. And I've been giving some significant thoughts as to how to identify a phase one wave that we shouldn't really trade. And to be honest with you, this is a perfect example. Any case, so the setups that we did look at, as you can see, not one of them worked out until eventually we got into a trade here on the 19th. We survived this pullback and have been trailing the stop ever since. So hasn't hit the take profit yet, which would be down here for standard targeting, but yes, still inside this in this trade. Aussie Kiwi, similar pictures to what we've seen before. This is just a pretty dead pair at the moment, and last week just giving us that that bullish candle. Really nothing of interest for us at all. We do have an existing overlay on this, but it's not really going anywhere, to be honest. And the daily time frame is pretty representative of that as well. Nothing of interest for us at all. Kiwi Swiss, second last currency pair. We do have that nice bearish impulse candle, and that, of course, on the daily time frame means that we have had a very nice bearish breakout from our four-wave channel. So still a potential trend, but certainly something that you could have started looking to trade, even if it was only on Friday, and certainly still at the moment as well. But there's another example of that very choppy behavior that we saw through the early part of Friday morning. Remember, we only look to get into these impulse trades after a pullback. I am expanding the training on this as well. So folks, please make sure that you go over the strategy training again in the next couple of weeks, because it is being updated just to take into account some of the additional tips that I've been giving you over the last 6 months or so. All right, so that's the story with that one, leaving us with the Kiwi Cad, which again has that very nice picture similar to the Aussie Cad, where it is outside, beautifully outside of our LPO channel. It is coming down to the support level with the four-wave channel, but nevertheless, last week's candle was a nice bearish impulse candle, which, oops, let's go to the correct chart, looks like that on the daily time frame. And you'll see that this is particularly attractive at first blush, because it is also a valid M pattern. Likewise, I think Monday it would have been, we did have a bearish impulse candle. So if you're trading this outside of the LPO range, you would have had a bearish trade here on your daily impulse strategy. If you are trading with the advanced targeting, then you should still be in one of the earlier trades on the daily impulse, because our trading stop would have kept us in this for well, up until now still. So that's what it looks like there on the daily time frame. Is this tradable? Has it been tradable in the lower time frame? Yes, absolutely. But again, we've had some choppy behavior. However, this is a trade that we are still in. It got very close to take profit on Friday, but didn't quite hit it. However, we are already at break even. So nice H4 impulse, not the best initial risks. Our initial reward to risk ratio not as great as some of the other H4 impulse trades we've had over the last couple of weeks that worked out, but nevertheless, it's we're not going to say no to that. All right, so those are our 28 currency pairs that we're looking at. And Pino's asking, so some of these setups that one would potentially avoid with the approach that I discussed earlier have potentially higher reward to risk ratios. Yes, absolutely. So if we are looking at setups where you've got, let's say, a 3 or 4 to 1 initial reward to risk ratio, but you're not taking the trade because we don't have an outside C close, for instance, that could well end up costing you money in terms of your return level. But remember, this is not just about maximizing returns, it's also about minimizing risk, and risk is represented by the volatility, certainly the downside volatility of your equity curve. Upside volatility, we will take every day, obviously. That's why we don't use the Sharpe ratio, by the way, to measure risk. Sharpe ratio does not differentiate between upside volatility and downside volatility. So Kalmar ratio, Sortino ratio, those are our preferred measures for performance. All right, folks, any other questions? Everyone happy with that? There's not a huge amount on the table at the moment. I think we've got, certainly on the H4 impulse, I think there's only 5 that conform to what we've just discussed in terms of the outside C closes, but that may well change through the week. But at the moment, it's not that active, but it's still certainly tradable. Right, guys, I'm not seeing any questions coming through. We will look to do some training this week. If you have any specific topics you'd like me to cover, please do go into the Facebook group and let us know there. You can also send an email to us at support@gbtacademy.com. So we've covered a lot of ground in our training over the last few months. So I'm happy to repeat anything that needs to be repeated. For those of you who are members, those videos are all now inside of the Complete Trader Skill Set course in the Trader Development Center. So please make sure to go over those. I am still building that out, certainly in terms of the text, and I will be doing some more training videos there as well. So it'll take me probably another 3 or 4 months to get that into a relatively complete state. But at the moment, 80% of what you need to know, in fact, probably well over 90% of what you need to know is in there. So please do make use of the training, and please do go over it again if you haven't done so in the last month or so. You're welcome, Pino. Thanks, guys. Have a great week's trading, and I'll chat to you later in the week. Bye for now.